Just a small change in the chapter. We're doing now what chapter? Capital budgeting, a concept called as life disparity. Okay, now, just because I am doing that, don't think it is unimportant. It is also very regularly asked in the examination. So we are doing it. Okay, give the heading. You need not leave page and all. You can understand it now when you read it. Your subject only. Okay, you can continue writing. You'll come back once again to short singleness model. So give the heading. Life disparity in capital budgeting. Life disparity in capital budgeting. Life disparity in capital budgeting. Please. We are going to do some very interesting problems in this life disparity in today's class. It is already known to you in the IPCC. The concept is not new, but we are going to do some problems which are very unique, and some problems where we can apply life disparity, where we should not apply life disparity. All this we'll try to complete in today's class. Now can I start or not? Now, life disparity in capital budgeting. See. See. And one more thing, just to share a few thoughts. Yesterday you all know about institute result. Everybody was scolding institute result, 3.11% result and all. And before that, you can also hear happy news. MTH got till now 2 ranks confirmed, 1 rank is unconfirmed. Okay, 7th, 8th and then 18th rank are the 3 ranks we are having. In the 7th, not yet confirmed, is yet to be confirmed. 8th and 18th are confirmed. Okay, now, apart from that, leave that. Let us come to the reality. Okay, understand that. See, institute result is 3.11%. Group wise say bad. It is only 5% and around what? 7%. Decimals and leave it. Okay, we don't want the decimal number. We'll round it off. Okay, so this is the result. Now, one thing is to get shocked and then say what? So bad result and all. Another thing is to be one of the person in the 3%, 5% or 7%. Now, if everybody does like that, institute cannot play because it has to surely put what? Results only. If a written answer, mark should be what? Given. Right or not? Now, see, main problem is last examination, I'll say, first group, they found FR very difficult. They found financial reporting what? Very difficult. I don't know. I cannot give suggestion. I don't know the subject at all. Okay. So now you are in a better position to understand, and science are there to give you what? Suggestions. Okay. They felt SFM also to be little bit difficult. Not difficult only. They felt it to be what? Difficult only. Okay. Now, I saw the question paper. In that, I'll tell you the problem. Okay. See, whenever they ask Forex, people become afraid. That is not in rupees, even dollar, euro, pound, that is unheard words. Okay, even though we did Forex so much, understand that in our classroom the luxury is, I was reading the code, explaining you had a comfort level of reading the question for you, you only have to what? Apply the concept. Yes or no? Cross rate has been asked in the examination, like that futures in Forex and so on, something here and there only is asked, nothing rate. But the main problem is allergy towards what? The exchange and the bid rate, offer rate. Question in our workbook, I'll give you in table. I'll give you in what? Table. I'll clearly demarcate. Swap and will be given what? Specifically. I make it more readable for you the question, and you'll be able to what? Have a comfort zone of reading and what? Doing it. That we cannot expect in the institute. Right or not? No. They will not even put any table, grid lines and all. They only give what? The numbers. In that case, main problem is questions are not difficult. Questions are not what? Difficult. The problem is you have to do 2 things in Forex problems. One is to understand the concept and answer. One. Another thing is what? To read the numbers and do the rate calculations. Are you following what I'm saying? These 2 together in the examination time, people find it what? Very difficult. You understood? No. This difficulty cannot be removed unless you read so many Forex problem on your own. giving an exchange rate, you should not feel allergic towards a number. It will be in decimals. It will be in what? Decimals. And that too you should know. Rupees by dollar may be given. There's $1. Rupees by also one can understand. Suppose they give CHF by what? Pounds now. 1 pound is equal to so many CHF. So many CHF is equal to what? 1 pound. They may give code anyway. We have seen or not. Reuters code one way and UBS codes what? Other way. Everybody follow what I am saying? All this observation is required. For that one should get used to what? Reading a forex problem and doing it. Everybody following or not? Now, this is to be done by you. You should have what? The allergy removed by reading what? A forex question. That is number one. I just wanted to tell you. Number two, the question paper, all chapters will get a representation. Same thing happened this time also. What we do is, if you do every chapter thoroughly, again, if you do what? Every chapter thoroughly, in that case, I can say there are 60 to 65 marks in the examination question paper, which is of the same type of problem done in the class itself. That is a blessing always. I can say same type of something done in what? Class itself, but number cannot be same. And the wordings also cannot be what? Same. But the concept is almost what? Same only. Those types of problems also, one should be able to easily and quickly do it with lot of clarity. Clarity in SFM paper comes only when you read thoroughly. When you read what? Thoroughly. Every chapter should be read what? Thoroughly. What problem you are having is, when you come to the SFM class, morning, you only want to copy problem solution. To copy problem solution, we need not come to the class here. A.M. Sridharan sir's book is there, Pattabhiram sir's book is there. Everything you read from the book is there. So many problems and solutions, right or not? Now, understand the importance of discussion. Importance of what? Discussion. How I speak the language of the subject. Subject is having its own language, its own tenor and so on. If you read generally, it will be creating vagueness. If you just listen to the class carefully, not only listening, if you listen, it goes here, comes out, yes or no? Then we have to what? Revise every paragraph or notes given, trying to answer what? Other questions which may create you more confusion. See, always, our workbook problem should not confuse you. Our workbook problem without my discussion will be confusing you. But our workbook problem will never what? Confuse you, because I have what? Given notes. Now Siddhanta Panniyachi, I just want made everything full class with full clarity. Water confusion may be that I say like this you should not think, then we what? Now please. Like that we discussed now. But this will not be the case when we read some other problem other than the workbook problem. Are you following not? Now please. Understand my difficulty. I cannot take care of all such problems. I am not a Dirgadarshi, knowing that what institute is going to ask so no, to remove all the confusions. But what you should know is, you should be having such a clarity in the subject that you should have read number of problems from practice manual, study material, etc. to get what? A grip over the subject. Everybody following? That is the second issue. Okay. Third issue is derivative segment. Third issue is what? Derivative segment. That is, I have to do something at beginning, something at what? Middle. Normally I start derivative 1.5 months back before the batch ends. Now we are in which month here? January. We are now in We are now in January. February mid or around 18th, I will be starting what? Derivative. It goes up to what? March end. So many issues will be what? Discussed. The problem is how a person revises IFM or to some extent what? Bond evaluation will not revise derivative. Why? Because he gets used to the class. He'll come in morning, go. Come in morning, go. He will not have what? The tendency to revise it back. Or he'll follow and say, I cannot start my batch with derivative because it becomes not understandable, because I have to have beta for discussing about futures. Portfolio should be necessarily what? Discussed. So from the portfolio onwards, the revision process lacks. The revision process what? Lacks. Unfortunately, all these chapters are complicated, not as simple as what I explained. Explanation sometimes becomes what? Difficult. In those cases, lack of revision makes futures or a swap segment somewhat what? Difficult for them. When it comes in examination, see, all these are not routine accountant terms here. The question will be what? Seeming to be unique, not because of a non-discussion in class or non-learning from you. It is because of what? The revision process lacking, it becomes. Okay, all this cumulative. Look at all this in what? A cumulative basis. When you suddenly read a question paper, you feel it is difficult. Earlier question why it did not happen is there are RTP questions regularly asked. In that case, seen sum will be coming and workbook sums at the same time will be coming, and new sums are the not new concept, but what? New sums will be what? Less in number. In that case, people are able to what? Manage, get 80, 85, anything number. It all depends. Okay, but now, again, it is not difficult. It is not what difficult. There's nothing like difficult subject here. All subjects are what? Easy only. Only the time you spend is what? Very important. Now, why I am telling all these things is, today we did CAPM or not. How many issues to discuss in the portfolio theory? Starting from risk return profile till what end. If you look at the study material, it will be utter confusion in what? Portfolio. What they are saying first, what they are saying what next. They treat everything independently. We never treat everything what independently. There was flow in our discussion, yes or no. We are leading from one issue to what another issue. The discussion flow is that with that flow if you revise and also do what? Study material sum and then see what is happening. Then we will be getting a confidence in attacking any sum in what? Examination. See, preparation is not a part-time. Preparation is what? A full-time. You should spend time for what? Revision always. Okay. When you come to the batch, coming and going, you will learn. Okay. But how fast you learn, more fast you unlearn also. The reason is you will forget very fast. When that is easy things can be remembered. Little bit complex now when you discuss levered beta, unlevered beta, proxy beta, or even CML, S7 and all, you understand it, the fragility in understand. Somewhat fragile, you are able to what? Understand. You may not be having the same clarity what I am having, yes or no? Because when I say with conviction or not. When you now learn, you don't learn with conviction. You have learned it, but it's going to be what? Somewhat in balance. It may be here or what? That side. Okay. How it can be strengthened? Yeah, only through what? Relooking it into it. You should think about the subject. Now, that is why I said you should study thoroughly all the subjects. Trend has changed. Trend has changed from the traditional areas and all. Now they start asking only from what? New areas. That's why I'm spending so much time in portfolio. So much will be spending in what? Derivatives. Almost 1.5 months plus will be spending in what? The derivative chapter alone. Some chapter I'll rush it through. Normally I do in every batch. It may like mergers and acquisitions. Very important only. But I cannot do the same EPS into PE ratio, MPS. All this we cannot do again and again. Those sums I'll be doing it, but not with what? Such elaborateness, because the problem may be asked that can be gone for what? To some extent self-preparation. We also try to manage within the time available how much focus can be given, but apart from focus, you should be having what? Revision. Rumba simple. All this problem can be overcome by doing what? The proper revision. I don't know about the other subjects. But you should know that all 8 subjects are equally important. It is very easy to fail, very difficult to pass. To fail one subject, if you fail, it is easy. You can fail the entire exam. So no. But to pass the entire exam, to clear what? All the 8 subjects, starting from ISCA till what? The SFM. Chuma or response I am saying. Okay. Anything. The subjects are what? Equally important. Plan your preparation that day. Okay. Don't study for the results. Always I say. Always study for first gaining the knowledge. Whatever you do, you should do with conviction. Somehow we should not do it. Or connect like this, sum comes, I'll do like this. Somehow you should not do. Anything you do, you should be knowing what? Why we are doing that. Are you following on? Now, don't by heart. By hearting important. I am not demeaning it. What should be by heart is, you should know in mind a map that whatever is discussed in the class you should be knowing. If I ask you bond what is discussed, you should know from sum number 1 to what? Sum number 28 what is being discussed. We discuss what? Value of the bond, YTM, duration, volatility, realized YTM, immunization, convexity, refund of bond refunding decisions, convertible bonds are all the issues discussed. Value dissection. Ever heard or not now? See, how I say now, it is there in what? Map here, mind mapping, yes or no? Like Google Map, from wherever they ask you, you should be able to what? Locate the numbers here, please. The syllabus should be in mind, the concept cover should be in what? Mind, but everything should be what? Logically known. Like how computer retrieves files, you'll be having what? Yeah? Map in the mind for each and every subject and every topic that can come only through what? Constant revision. Now, and I foresee that the exam standard will be what? Improving batch after batch only. It is not going to reduce. And that is also good for you because you learn what? More things. You need not worry. Exam standard improves, coaching standard improves, preparation also should what? Improve. Only thing is revision is what? Required before going for the exam. Always don't believe in the past practice manual sums or RTPs. It was asked still the last attempt, not asked in the current attempt. So it may not be asked in the future attempts. Always read the subject thoroughly. Every subject is a way to prepare for the examination. Now, come to the life disparity. Life disparity important or unimportant? Important. Everything is important. What you feel as unimportant may be asked in what? Examination. Now, understand that if I leave one or two issues, generally when I complete the batch, I'll say these issues I have not discussed. Maybe it is due to IPCC portion or maybe due to self-preparation because it happens due to time factor. Understood not? Now, whatever I leave, don't think it is unimportant. Whatever I leave may be manageable by you or should have been what? Already known to you. That is also a warning already. So everything should be what? Prepared for it to be safe in the examination. Any right or not? Now, come here. Life disparity. See. When I select a project, capital budgeting is all about project selection, right or not? We'll do very elaborately in the next stage, capital budgeting, like leasing, uncertainty, and then the other issues. It's a very interesting chapter. It is all about the project selection, in which I'm discussing one concept in today's class. Okay. See, I will select a project when the NPV is positive, right or not? Yeah, right or not? When the NP will be positive, when the IRR is more than what? Cost of capital. Yes or no? Because I get money, I invest money. The return on investment should be more than the expectation of the fund provider. Ennappa, right or not? So what the fund providers want is called as WACC, cost of capital. What the company earns is called as what? IRR. When IRR more than cost of capital, NP will become what? Positive, and the project will be accepted. This is called as is called as accept reject decision. What decision? Accept reject decision. Two projects are there, both are giving a positive NP means what? Both can be accepted, or both which is having IRR more than cost of capital can be accepted. It's a normal way of making decisions. Ennappa, right or not? Now, see. When the decision is mutually exclusive, decision is what? Mutually exclusive. What do you mean by mutually exclusive? What is mutually exclusive here? That is, one of them only can be selected. Even both may be good, but I cannot select what? Both. Only one of them should be selected. This is called as what? Mutually exclusive. In that case, we should select one of them or not. Now, I can either go by NPV or go by what? IRR. Both are equally good methods only. Now, if I go by IRR, I select the project having the highest IRR. If I go by NPV, I will go for the project having the highest NPV. IRR measures are written in percentage, annualized percentage. NPV measures written in what? Rupees. Okay. So, highest NPV or highest IRR project should be selected. Accept or not? No. But sometimes there may arise a problem where NPV will be more for one of the project and IRR will be more for the other project. NPV more for project A, IRR more for what? Project B. In such a case, there is a conflict between NPV and IRR for project selection. Response yes or no? Again repeat. Now, accept, reject, no problem. NPV says accept, now IRR also will say what? Accept. Because NPV will never be positive unless IRR more than what? Cost of capital. There is no problem in regarding accept, reject decision to accept a project or reject a project. The problem arises when you have a mutually exclusive, when there are two projects, one may give a high IRR, another may give one high NPV. Percentage return may be more for one and rupee return may be what? More for another. In that case, there is a conflict between NPV and IRR. Ennappa, right or not? This conflict may be due to three reasons, but I will call it as only two reasons. Okay. The two reasons for such conflict is life disparity. Second is called as timing disparity. What are two reasons here? Life disparity, and second is called as timing disparity. Third, they call as size disparity. That will be taken care through PA later, that you leave here. There are only two disparities, namely what? Life disparity and then what? Timing disparity. Now, life disparity will be tackled using a concept called as EAB or EAC. The EAB expansion is equated annuity benefit. EAC expansion is equated annuity cost. Timing disparity will be tackled through the concept called as modified NPV and then what? Modified IRR. What it is, we'll be discussing elaborately. Now tell me, what is that we are discussing? NPV selects one project, IRR selects another project. This is called as what? NPV IRR conflict. Why it arises? Either because of life disparity or because of timing disparity. The technique used to solve the life disparity is what? EAB or EAC. The technique used to solve timing disparity will be called as modified NPV or modified IRR. Today we will be discussing about the life disparity concept now. Can we start or not? Now, let's have a small understanding of EAB and EAC before we start doing the problem in this regard. Can I proceed up? Now, take an example. There are two projects, A and then B. Okay. Year 0, year 1 and then year 2. A, I invest 50 in year 0. I get 30 in year 1. I get 90 in year 2. B also invest 50 in year 0. I get 90 in year 1 and nothing in year 2. Can I proceed or not? That is, I have two projects. Can I accept A and B? No. It is either A or B. We are discussing about a mutually exclusive situation. If I want to do project A, today I have to invest how much? 50 crores. Let's understand that 50 crore rupees. I get how much inflows? 30 in the first year, 90 in the second year. If I do project B, how much I have to invest today? 50. I get how much? 90 in the first year, nothing in second year. Ennappa, right or not? No. Suppose the cost of capital is 10%. The WACC, how much percent? 10%. That is the discount rate is 10%. Can I proceed? Now, please, I want you to calculate and tell me NPV. I want to tell me the NPV. How to do it? 30 into 0.9091 plus 90 into 0.8264 gives you a discounted inflow minus what? 50. Yes or no? Those who know how to calculate NPV, raise your hand here. I think all can understand or not? Rumba simple, yeah. See. Wait, 51.65. Now, rumba simple, yeah. What is NPV? Discounted inflow minus discount outflow. Can I say 30 plus 90, 120 minus 50, 70, can I say or not? No. I will discount this 30 and 90 or not. Present value factor of a first year 10% is what? 0.9091 and second year is what? 0.8264. 30 into 0.9091 plus 90 into 0.8264 gives you a discounted inflow minus 50 gives you what? 51.65. Are you all able to understand it or not? Now, come to the second project. 90 into 0.9091 minus 50 gives what number? 31 point some number, 31.81. Please. Shh. Now, NPV for project A is 51.65. NPV for project B is what? 31.81. I want an answer. As per NPV, should I do project A or should I do project B? Answer. Project A or project B? Why is a project A should be done? Because it gives me what? More net present value. Everybody accept or not? Now, next. See, if you calculate IRR, I don't want to calculate. If you calculate what? IRR. What is IRR? Rate of days discounted inflow will be equal to what? Discount outflow. We calculate YT mean bond valuation, right or not? If I calculate IRR, believe me, IRR for B will be more and A will be what? Less. And I invest 50, immediately get what? 90. The return rate is fast, yes or no? But here I invest what? 50, I get 30 and then get what? 90. Right or not? No. In case of NPV, A is what? Selected. I'll say IRR will be low for A and then what? High for B. IRR selects what? B. You can believe me. Everybody following or not? Now. So NPV selects A. IRR selects what? B. Why? Because NPV looks at the amount of return. IRR looks at what? Rate of return. Now, NPV looks at the amount of return. IRR looks at what? Rate of return. We say I am getting 51.65 extra wealth. Can I say I earn how much? A higher rate of return because 50 invested got immediately what? 90. That is why NPV IRR selects two different projects A and B. Right or not? Now, the problem is because of life. The problem is because of what? Life. A is having how many years life? 2 years. And B is having 1 year life. Due to life only, the NPV and IRR are showing the different selection. Response is or no? But simple understanding is same. Project A is having a longer life, suppose. Project B is having what? Yeah, shorter life. Since NPV sees quantum of return, every year if I get 1 rupee for what? 100 years, I'll be having more NPV. You know, no? Yes, correct, huh? But IRR does not want to see the amount, it wants to see what? Speed. Okay. Every year 1111 are getting 10 rupees in what? First year. Which is more fast year? First year 10 rupees. Right or not? So IRR looks at the speed of the return. NPV goes for what? The size of the return. In that case, longer the life, more the cash flow will get, more will be the net present value. You'll follow what I'm saying? General tendency of NPV is to tilt towards what? A longer life project, because longer the life, more the cash flows will be getting, more will be the net present value. Is why NP is setting a longer life project generally. Everybody following or not? My issue, so just to give us an example, it is very famous. I also used to give an IPCC. Very simple. Yeah, two players always people compare. Okay, one is Tendulkar, another is what? Bradman. Yes or no? Correct, Tendulkar and what? Bradman. Who is great player? Tendulkar or Bradman? So both can be called as what? Great. You can say both are great, you cannot say, because mutually exclusive decision. Yes or no? In that case, who is great means one person can say that, see, Tendulkar scored so many runs. He has scored around 15,000 plus runs. Weak in statistics, when we want 15,000 plus test runs he has scored. Bradman scored only what? 6,000 and odd runs only. Look at the number of runs scored by Tendulkar. Tendulkar is great because he has scored more than twice than what? Bradman. He is the greatest player. One can say, yes or no? Another person can say, no, don't look at the strike rate. Every match the strike rate is only 54 runs here. He scored what? 99.96 runs per match, which is big. Yeah, Bradman is big, right or not? In that case, what the difference here? NPV not Tendulkar. IRR means what? Bradman. Yes or no? Because NPV sees the amount of runs scored, IRR sees what? The runs per match score. Yes or no? Yeah, see the amount of cash flows here, I see the rate per annum which I am saying. Everybody follow what I am saying? So, longer I play, even if I play for what? 200 test matches, I may score. Are you follow what I am saying? For example, okay, now, suppose I am as fit as him and so on. Okay, in that case, just for example, okay, I am not demeaning any person, I am only saying example. Longer you play, more the runs you score, yeah. Shorter you play what? Less runs you score. So always NPV goes for what? Longer life project, because more the project life, more the cash flows. Everybody following not? IRR does not see how much you are getting, it sees what? How fast you are getting. It always goes for the faster cash flow project and not for what? A longer life project. Ennappa purinjudha? My son, no. Lighter tone. Only example, okay. It is also another example aptly fits here. That is a very famous example in Facebook also. Lalu and Bin Laden they compare, okay. Now, Lalu had one wife, 8 children. Okay. Bin Laden has 10 wives, 20 children. Who is great? Other question, yeah. They say IRR Lalu, NPV Bin Laden. Yes or no? No. So if we count the number of children, who is big? Yeah, Bin Laden. 10 wives, more children. Yes or no? That is normal, right or not? Now, Lalu it is what? IRR what? More. 1 wife, 8 children. Yes or no? In that case, example, yeah? Not real life, only example. Can I proceed now? Disclaimer, can I proceed now? Did you understand the concept of NPV IRR? Now come back, please. NPV always goes towards what? Longer life project. Now, the problem is, we are not properly comparing. We are not properly comparing. We are comparing 51.65, a 2 years project NPV with what? 31.81, a 1 year project NPV. It is having unequal lives. It should not be what? Compared. One should compare only by making their lives what? Equal. Is the next stage of discussion. The main problem is in comparing the NPV. In comparing what? NPV. Okay. That means I should not compare NPV of project with unequal lives. You should make it into what? Equal life and then compare. Respond, yes or no? There are two options that are before me. First option is repetition method. First option is called as what method here? Repetition method. See, we have A and then what? We have B. If you all remember the number, tell me year 0, year 1, year 2. What is A investment? 50. B, what is year 0? 59. Okay. Now, understand that before A is completed, B can be done 2 times. This is a 1-year project. This is what? A 2 years project. So before a 2-year project gets completed, I'll be able to repeat the 1-year project how many times here? 2 times. So what I do is, I say B repeated or B revised. Today invest how much? 50. I get what? 90. 1 time over or not? Now, at the end of first day, what I do? Once again invest what? 50 and then get what? 90. Ennappa, right or not? See, before A is completed, I can do B only once, more than once, more than once. I can do B how many times here? 2 times. Now, I start B today, investing how much rupees? 50. How much B gave me? 90. To take the 90 home, no, I invested back what? 50. To B once again, and then I earned how much? 90. 90 minus 50 is what? 40 can be net off. Yes or no? I need not calculate. Which is better here? 50, 30, 90 better. 50, 40, 90 better. 50, 40, 90 better. B should be selected. Respond. Are you following or not? Or you can calculate now NPV. This A NPV and B repeated NPV can be what? Compared because the NPV will be of what? Equal lives. I have the clarity or not? In that case, the lesson number 1 is, in mutually exclusive projects, when you have 2 projects with different lives, can their NPVs be compared or should not be compared? Should not be compared, because a project with a shorter life can be done more number of times than the project with a longer life. Make them into equal life and then do the NPV using a method called as what? Repetition method. Everybody following or not? Now, I'll take the discussion forward. Now, please answer me. Independent examples. A, B. A is having a 3-year life. B is having what? 2 years life. Can I compare A's NPV with B's NPV? No. This is a 3-year NPV. That's going to be what? 2 years. Then what I should do? Do A how many times? 2 times. And do B how many times? 3 times. Make both into what? 6 years cash flows and then compare the NPV. Enna paisa no? So A I can do how many times? 2 times. And B how many times? 3 times. It will be having 6 years cash flow. They will be having what? 6 years cash flow. NPV can be compared. Yes or no? Now, another example. A 4 years, B is what? 3 years. Can I compare A and B NPV? No. What I should do? Do A 3 times and do B 4 times. Wait, how many years? 12 years. And compare NPV. Repetition method. Yes or no? Last example. A is having 9 years, B is having 11 years. Duration. Okay. Can I compare NPV of A and B or not? No. What I should do? Do A how many times? 11 times. And B how many times? 9 times. Wait, how many years? 99 years. And then compare NPV. Yes or no? Like that question asked him, what you will do?
Leave as option.
Okay, 99 years when you write, you will become 99 before you clear CA. Yes or no? No. In that case, the method is okay. It is very long. It is what? Very long. Everybody following or not? Now. We have to write A how many times? 11 times. 99 cash flow should be written. 99 PVF should be written. And then calculate what? NPV. Do B how many times? 9 times. It also becomes what? 99 years. Then calculate means this becomes somewhat not a good proposition to compare. Ennappa right or not? No. So, the first method I call as what method? Repetition method, which I don't like it. I like it for the conceptual clarity. I don't like it for what? Usage, because of the inconvenience it causes in case of a longer life projects. Everybody following or not? No. What is the alternative way out is the issue. Why I am discussing this is I am going to use this in one of the later discussion in concepts. Can I proceed? Now, next. What is the other way out? Now tell me. A is there, B is there. A is having 9 years, B is having what? 11 years. Now, tell me, NPV of 9 years can be compared with NPV of 11 years, cannot be compared, cannot be compared. It is wrong, yes or no? No. But, what I can do is, I cannot compare 9-year NPV with what? 7-year NPV, 11-year NPV, I can accept that. But, I can make it per annum and compare. 9 years NPV converted into what? Annual NPV. 11 years NPV converted into what? Annual NPV. Please make it per annum and then what? Compare. That becomes comparable. Yes or no? Instead of taking into 19 years, I can bring it to what? Per annum and then compare. Respond yes or no? So 9 years NPV is a NPV. Even through how many years here? 9 years. So divided by what? 9 gives a per annum NPV. Or you'll find not. 11 years NPV is going to be what? 11 years benefit divided by what? 11 gives a per annum NPV and then it can be compared. But this cannot be done as it is because year 1 is not 1. Year 1 is what? 0.9091. Year 2 is not 2. It is only what? 0.8264 and so on. So don't divide it by 9. Divide it by what? Annuity factor for 9 years. Don't divide it by 11, but divide it by what? Annuity factor for 11 years. Ennappa, yes or no? Yes or no? Now, in that case, what happens is, NPV is called as benefit. NPV is called as what? Benefit. It is what benefit? Total benefit. Is the total benefit for what? 9 years. So NPV is a 9 years benefit. Yes or no? Divided by what? Annuity factor, I get an annuity benefit. Yes or no? Total benefit, that is very simple. Loan amount divided by annuity factor gives you EMI or not? Loan amount is the amount to be repaid over what? 10 years period. Divided by what? Annuity factor. I get the equivalent loan amount repayment over what? Every year. Right or not? Like that. NPV is the benefit. If I divide the benefit by what? Annuity factor. What it is what? Annuity benefit. Hence they call as EAB. Equated annuity benefit. How we have equated monetary installment? EMI. Yes or no? Like that. I call it as what? Equated annuity benefit is called is this formula. Tell me what the formula for EAB. EAB is equal to what? NPV divided by annuity factor. Right or not? Now, suppose it is a cost dominated problem. I should buy machine A or machine B. No income. Machine A is having some running cost and purchase cost. Machine B is having some running cost and purchase cost. In that case, the numbers will be inflows, outflows are predominantly outflows. In case of outflows, I call it as what? EAC. That is, it is a total cost divided by what? Annuity factor gives you the annuity cost. So I can decide based on EAC. Both are same. NPV divided by annuity factor or discount outflow divided by annuity factor will give you EAB or EAC. On that basis, decision should be made. Now, in final, we are going to do some problems which are very unique EAB or EAC problems, and also some problems where it seems to be EAB EAC, but we should not be using what? EAB EAC concept. Is all I'll be discussing in this particular stage. Everybody, are you understanding or not? So now the conclusion let us have and then go for the small notes in this regard. Number 1. NPV IRR in case of mutually exclusive projects can select different projects. Yes or no? Two reasons are what? Life disparity, timing disparity. Life disparity should be tackled using what concept? EAB, EAC. Timing using what? Modified NPV and modified IRR. Two projects having unequal lives, can I compare the NPVs? No. We will make them into what? Equal life. There are two methods. One is repetition method, other is what? EAB, EAC method. In repetition method, do the projects repeatedly and make the life equal. EAB, EAC method, divide the NPV by what? Annuity factor. I will be getting the EAB or EAC. So the project having the highest EAB or what? Lowest EAC is the answer. Everybody following or not? This is regarding the tackling of the life disparity. Now, everybody full clarity are having a? Now, what you have to know is, what is EAB formula? NPV divided by annuity factor. What is EAC formula? Discounted cash outflow divided by annuity factor. There will not be an inflow like NP will become an outflow. Say it is going to be net discount outflow divided by annuity factor is EAB and EAC. Can I proceed or not? Now, what I will do is, we will do the problems. I will give the notes in printed form, not to unnecessarily dictate and write it. Already discussed in what? IPCC. Next class will be giving the notes in what? Printed form. Already as promised, I gave you one printed notes for IFM or not. Believe me, today or tomorrow I will be surely giving you the notes. We'll start doing the problems. Okay. Some very interesting problems are there in this EAB, EAC concept. Now, before that, I have one machine 9-year life. I have another machine what? 7-year life. My question is, can I compare the cost of 9-year machine with cost of 7-year machine or not? No. What I should do? Calculate EAC and then compare. Yes or no? Now, Suppose there is a project A having 12-year life, project B having 7 years life. Can I compare the NPV of A and B or not? No. What should you do? Compute EAB and then compare. This is a normal IPCC level problem. We'll be doing in this EAB, EAC. Right or not? No. In the final, we are going to do some unique EAB, EAC problems. So take that chapter, capital budgeting. Let us see what those problems are. Okay. Now. Question number 9, question number 10, question number 11. These three sums are those sums which deals with this life disparity concept in different ways. Okay. All the three are unique and very good sums. Take question number 9. Page number 47, question number 9. Please take it. Page 47, question number 9. Can I start up? Now. Photolysis Limited uses a 10% discount rate for the project appraisal. It is considering purchasing a machine which, when it comes to the end of the economic life, is expected to be replaced by an identical machine and so on continuously. The machine has a maximum life of 3 years. That is, its productivity declines with age. It could be replaced after either just 1 or 2 years. Financial details are as follows. Outlay 1000. First year revenue 900, cost 400. Second year revenue 800, cost 350. Third year revenue 700, cost 350. Scrap value if at the end of first year 650, end of second year 400, end of third year 150. What is the appropriate replacement cycle is a question that is being asked. Okay. Now, go through the question before we start with the solution. Please, these questions try to understand and see how it could be answered. Just plan on your own before you start with the solution. Please read the question carefully. Shall we start or not? Now. Very unique type of capital budgeting problem called as a replacement cycle problem. It is called as what problem? Replacement cycle problem. Okay. See, I have 3 options. How many options? 3 options. We require a machine. The question is not whether the machine should be purchased or not. That's not the question. We surely require what? A machine. Not for 1 year or 2 years, but continuously. This is going to be a continuous process. We require a very important machine for our business for perpetuity. Are you following not? Now, the problem is, this machine cannot be kept perpetually. Yes or no? Every machine is having a useful life or not? Now, this machine is having how many years life? Maximum 3 years. It does not mean that I should keep it for 3 years. It does not. It is my choice. I can replace my machine once in every year. I can replace my machine what? Once in every year. Or I can replace my machine what? Once in 2 years. Or in what? Once in 3 years. Can I replace once in 4 years? Not possible. Because the maximum life of the machine is how many years? 3 years. So the question is, should I replace the machine once in a year? or once in 2 years, or once in 3 years, is what the question is all about. Everybody understood the question or not? So the question is, the given is all about when the machine is to be what? Replaced. It should be replaced every year, or once in 2 years, or once in 3 years. You understand the question or not? Okay, now, these three options, I have to compare. Okay, suppose, let us see the cash flow. I keep the machine only for 1 year. I keep the machine only for what? 1 year. In that case, how much I invest today? 1000. How much I get as sales from machine? 900. What the material and other operating costs? 400. I get a profit of 500 for the machine in the first year. I sell it for what? 650. Now, so if I keep the machine for 1 year, I invest today how much? 1000. I get the first year profit or operating cash flow and sell it what? First year at a scrap of 650. Point number 1. Accept it. Suppose I keep it for how many years? 2 years. Tell me how much I invest today? 1000. Correct? Now, first year I get what? 900 minus 400, 500. Second year I get how much? 800 minus 350, 450. Also sell at what? 400. Ennappa, yes or no? Now, the scrap value reduces as the life of machine what? Increases. It becomes much more older. Right or not? Now, suppose I give the machine for what? 3 years. Tell me what is the advantage? Invest 1000 today, get first year 500, second year 450, third year 350, and sell it for what? 150 at the end of the third year. These are the three options. Whichever option gives me the highest NPV, that should be selected. Point number 1. Accept or not? Again I say, option 1, everybody tell me what is option 1 cash flow? Invest how much? 1000. First year you get how much? 500. As well as what? 650. So if I keep it for 2 years, what are the cash flows? 1000. 500 in first year, 450 in second year, and sell at 400. 3 years means what? First year invest 1000, year 0, get what? 500 first year, 450 second year, 350 third year, sell at what? 150. Yes or no? Now, all the three options are like 3 projects. Yes or no? Which one is having what? Highest NPV should be selected. Yes or no? No, because option 1 is having a 1 year cash flow, option 2 is having what? 2 years, and 3 is having what? 3 years. It's an EAB problem. Everybody, yes or no? If a question gives you 5-year machine, 4-year machine, we'll simply say it is what? EAB, easy to identify. But always when it comes to a replacement cycle problem, understand that the problem is always what? An EAB problem, because I cannot compare option 1, option 2, option 3 per se, because one is a 1 year option, another is what? 2 years, and the third is what? 3 years option. One should only make the decision based on what? EAB or EAC, or not based on NPV. Yes or no? Nothing, right? They calculate as usual what? NPV. One extra step is divide the NPV by what? Annuity factor. I'll be getting the EAB or EAC. Lesson number 1. Everybody following? Can I start? Now let's start doing the problem together. Okay, before that, these will write as a notes later. What the given is all about when the machine to be replaced. Option 1 is replace what? In 1 year. Replace in 2 years, or replace in what? 3 years. Okay, now, can we do it together? Yes, sir. Open the following columns, please. Question number, so just write capital budgeting, question number 9, page number 47. So we are moving into an unrelated area. Unrelated project, beta changes, right or not? So it is a different area. Understand that, because we are postponing the sharp single index discussion to the next class, hence I am deviating. Okay, now it's not due to me, it is due to you. Can I say? No. You are your friends here. Can I say? No. Open the columns or not? No. Can you start? Okay. What discount rate we use? How much percent? 10%. Okay. See. Year 0, how much I invest? 1000. Write along with me. Year 0, 1000. Year 1, I get 1150. Year 0, 1000. Year 1, I get 1150. Bracket, how I got 1150? 900 minus 400 plus 650 is what? Salvage value. 1150. Year 2, any cash flow? No. Year 3, any cash flow? No. And the mission is going to be kept only for 1 year. Okay, dash and dash. Everybody, are you understanding writing or not? No. Tell me the present value factor. EA0, what is PV factor? 1. I think it is 10% discount rate. Child should know the factors. What are the factor? 0.9091. So 1 into 1000 is minus 1000 discounted cash flow. First year 0.9091. 0.9091 into 1150 gives you 1045. 1045. Next, second year 0.8264, it is nil and no cash flow to be discounted. Third year 0.7513, it is also going to be nil, no cash flow to be discounted. Shall I proceed? Now, option 2. All of you participate in writing the cash flow. ES0, what is the investment option 2? Same 1000. Okay, before that NPV in option 1 is 45. Option 1 NPV is 45. Okay, now option 2, ES0 investment is 1000. First year how much I will be getting? 500. I get 500 operating inflows. Second year I will be getting how much here? I will be getting 850. I will get 850. Can everybody tell me how I got 850? Operating inflow is 450 and the sale of machine is another 400. It is 850. Understood? Yes, sir. Yes or no? Can I proceed? Next. Third year is going to be nil. Third year is nil. 1 into 1000 is minus 1000. 0.9091 into 500 is 455. 0.8264 into 850 is 702. And then the third case is nil. NPV is 455 plus 702 minus 1000 gives you 157. NPV is 157. Now, 3 years, if I keep the machine for what? 3 years. How much I spent today to buy the machine? 1000. I spent 1000 to buy the machine today. First year the machine gives me a profit of 500. Second year the machine gives me a profit of 450. Third year the machine gives me profit as well as what? Scrap value. It is going to be 750, 700 minus 350 plus 150 gives you 500. Third year gives me profit as well as scrap value. It becomes 500. Right or not? No. Next is discounted cash flow. 1 into minus 1000 minus 1000. 0.9091 into 500 455. 0.9091 into 500 455. 0.8264 into 450 372. 0.7513 into 500 it is 376. 0.7513 into 500 is 376. If you total, tell me what is the NPV it is? 203. 203. NPV is 203. NPV is 203. Now, everybody understood the cash flow writing and calculations or not? Please tell me. I want to have a confirmation. Those who understood, raise your hand. Okay, those who not raise their hand, understood abba? Understood or not? Can I proceed? Now, next. Now I say that if I keep the machine for 1 year, NPV is only 45, 2 years 127, 3 years is what? 203. Keep the machine for 3 years, answer, over or not? No. It is wrong because if I keep it for 3 years, NPV will be obviously what? More only. But before that, I can earn 45 3 times. Right or not? Yes or no? It is having a repetition because the machine is not once investment, is a continuous process. Everybody yes or no? In that case, one option is I should not compare the NPVs as it is. Option is what? Make it into equalize and compare. That is, machine 1 can be replaced 6 times in 6 years. Machine 2 can be, that is, 2 can be replaced what? 3 times in 6 years. And option 3 can be replaced in what? 2 times in 6 years. Write this cash flows 3 times, 2 times and 1 time. And then what? Find out the NPV that is comparable. Yes or no? That's a lengthy method or not? The other option is to go for what? EAB. And go for what? EAB. Divide this NPV by what factor? Annuity factor. I'll be getting EAB. Accepted? Write down. Next. You can continue writing in the same table itself. I wrote the NPV because I am changing the slide. You continue that. Write what factor? Annuity factor. Right? Annuity factor. 1 year annuity factor is its present value factor. Yes or no? Yes, sir. Correct? Huh? What is annuity factor? Total of PE factor or not? So first year annuity factor is 0.9091. Calculator. 10% 2 years annuity factor. 1 divided by 1.10 is equal to 2 times plus grand total. What is annuity factor? 1.7355. Annuity factor is 1.7355. Now, option 3. 1 divided by 1.10 is equal to 3 years GT. What is the number here? 2.4868. 2.4868. EAB is NPV divided by what? Annuity factor. 45 by 0.9091 is 49. 157 by 1.7355, 90. 203 by 2.4868, 82. Some number, 82. Everybody yes or no? Now, in that case, which should be selected? Option 2 or 3? 2. It gives you what? Highest EAB. Write down. Replace once in 2 years. Replace once in 2 years. Since the EAB is highest. Replace once in 2 years. Since the EAB is highest in that option. Replace once in 2 years. Since the EAB is highest in that option. Since the EAB is highest in that option. Is highest in that option. Everybody, are you having the clarity or not? Now, the sum, if you look at as it is, it will not seem to be what? Life disparity. In fact, it is a life disparity. Sum is the uniqueness. From now onwards, always replacement cycle problem comes now. It becomes what? A life disparity problem. Everybody, point number 1, accept or not? Now, take the next question. Question number 10. Take question number 10. Mark it as important. Very interesting question. Mark it as important. Demeter Limited owns a machine of type DK which could be used in production for 2 more years at most. Don't talk, please. The machine originally cost 45,000 5 years ago. Its realizable value is currently 8,000 because a special opportunity for sale has arisen. But it could be 0 at all subsequent times. If the machine were to be used for 2 more years, it would require a major overhaul at a cost of 9,000 at the end of first year. A new model of the machine is now being marketed. It costs 40,000 and has a maximum life of 10 years. Provided that the special maintenance is undertaken at the cost of 10,000 after 5 years and a cost of 20,000 after 8 years. The new model would have no realizable value at any time. Assume that no other new model is expected to become available in the foreseeable future and that no changes are expected in the cost of demand for the output of the machine. Demeter's cost of capital is 15% per annum. Required, prepare calculation to show whether Demeter's existing machine should be replaced now or after 1 year. It is or after 1 year or 2 years. After 1 or 2 years. That on make it as what? Or after 1 or 2 years is a question. Go through the facts carefully before you start with the solution. Please read the facts quickly. Shall we start up? Now. See. So many facts are given. Everything should be correlated, and then we can have a matrix and then start doing the solution. Okay, let's have a overall view of the entire solution and then go for the further discussion. Can I start or not? Now, see, there is a mission which has got at most, how many years life? How many years life here? 2 years life. It does not mean that I should replace it only after what? 2 years. I can even replace today or after 1 year or after 2 years. This is a choice available for me. Point number one, yes or no? Okay. Now, this mission which can be replaced either today or after 1 year or after 2 years can be replaced by a new mission. Can be replaced by what? New mission. The new mission can be kept either for 5 years or can be kept either for 8 years or can be kept either for 10 years. Because if I don't do the first 2 overhaul, I'll keep it only for what? 5 years. At the end of 5th year, if I spend 10,000, the mission can run for what? Another 3 more years. I mean, how many years here? 8 years. At the end of 8th year, I spend another 20,000 for maintenance. I can prolong life to what? 10 years. Again, I say, I have an old mission. It can be kept what? For 2 years or 1 year, or can be replaced today itself. Now, and this mission will be replaced by what? New mission. The new mission will be having a 5-year life if I don't do any maintenance on that. It can have what? 8 years life if at the end of 5th year I do a 10,000 rupees spending and doing a maintenance. It can have how many years life? 10 years life if I maintain by spending what? 10,000 at the end of the 5th year and 20,000 at the end of what? 8th year. So I have 3 choices for new mission also. I can decide to keep the new mission only for 5 years without doing any maintenance, or for keeping it for what? 8 years by doing maintenance only once, or by keeping it for what? 10 years by doing maintenance 2 times. Yes or no? That means I have 3 options for old mission. I have what? 3 options for new mission. Totally how many options are there? No, you'll be having 9 options. 3 and 3. 3 or 3. Both are what? Cumulative. How many options here? 9 options. Let's see what is that? 9 options. Okay. Now, see. This is the term matrix. Understand that. Old mission and then what? New mission. I immediately sell the old mission today and replace by what? New mission. I decide to keep it only for what? 5 years. That means it is a project having a 5-year life. Suppose I am going to replace the old mission now itself, but keep the new mission for how many years here? 8 years. It is a option having how many years life? 8 years life. I am going to replace the old mission now itself and decide to keep the new mission for how many years? 10 years. By doing 2 overhauls, in that case, it is an option having how many years life? 10 years life. Ennappa, right or not? Now, second. I decide to replace the old mission only after what? 1 year. So old mission is for 1 year and the new mission will give for how many years? 5 years. That means this is the second, this option is having how many years life here? 6 years life. Ennappa, right or not? Now, I decide to keep the old mission for 1 year and replace the new mission and keep the new mission for how many years? 8 years. Is the option of how many years life? 9 years. Third is old mission I keep it for 1 year and new I keep it for what? 10 years. Option is how many years life? 11 years. I keep the new mission for 2 years and I keep the old mission for 2 years and then by what? New mission. What is the life here? 5. 2 plus 5, 7 years. I keep the old mission for 2, new mission for 8. How many years? 10 years. And that is going to be 12 years. So all these are different options. Now, in all these options, can I compare the outflow straight away? No. I cannot compare a 5-year outflow, an 8-year outflow, and a 10-year outflow. For all this, I have to calculate what? EAC. And the question is no inflow except for a small salvage value. It is an outflow dominant sum or not. I have to select that option having what? Lowest EAC. I cannot compare the outflow per se because they are having a different legs. Yes or no? By mark here. Yes or no? Those are understood. Raise your hand. Okay, put the hands on. Those who want me to explain once again, don't feel hesitant, raise your hand. Okay, I've seen the hands. I'll explain a little bit and then proceed. Wait a minute. Yes, Yes. See, understand the facts here. Number one, old machine is there, right or not? I can dispose it of today itself, or keep it for what? 1 year, or keep it for 2 years. Accepted? Yes, sir. Those raise a hand. Accepted or not? No. New machine which I buy, I can keep it for 5 years, or I can keep it for what? 8 years, or I can also keep it for 10 years. Why 3? If I don't do any repair, I have to keep it for what? 5 years. If I repair once at the end of 5 years, you can go up to how many years? 8 years. If I do one more repair at the end of 8 years, I can go up to how many years? 10 years. This is a new machine. Are you find what I am saying? So 3 choices for old and 3 choices for what? New. Together, how many combinations are there? I am saying. You know, understood? Now, please. First row is, I replace old machine today. I keep the old machine for 0 years. I replace old machine what? Today. And keep the new machine for what? 5 years. That option is how many years life? 5 years life. I replace old machine today and keep the new machine for 8 years. That option is how many years life? 8 years. I replace the old machine today and keep the new machine for 10 years. How many years life? 10 years. Yes, sir. Now you tell me, what is this 10 years? What is this 10 years? What is this 10 years here? I decide to keep the old machine for 2 years and new machine for 8 years. Is this 10 years? Yes or no? No. I want to know what is this middle 9 years. I decide to keep the old machine for 1 year and new machine for 8 years. Now, like that I have a term matrix. Yes or no? Now, every cell is one option. Now, in this option, the problem is an inflow dominated problem, outflow. Purchase cost, maintenance cost, everything is only what? Outflow. So it is an EAB or EAC problem, EAC. I cannot compare the outflows of all the 9 options as it is because each option is having a different life. Yes or no? In the case to remove the life disparity, I have to calculate what? EAC. The discount outflow should be divided by what? Annuity factor to get the EAC. Respond, yes or no? Now, let's see the other cash flows also before I go for the calculation. Please copy this term matrix first before I go for the next one. Question number 9. Please copy first. Question number 10. Okay, question number 10. Copy first, please. Yes, on one number. Finish copying, huh? Do you understand how this matrix has been written or not? No. It is structure of the entire problem. You have to find out the 9 EACs. How many EACs to be found out here? 9 EACs. Finish copying or not? No. Listen here. Next issue. Let's discuss some of the cash flows and then proceed. See, old machine Original cost of 45,000 5 years ago is relevant, irrelevant. I don't want to know what has been already spent because everything is about future benefits. So forget about that 45,000. We are discussing, can I proceed or not? Now, next. See, if I replace a new machine, old machine today itself, the old machine can be sold for how much rupees? 8,000 and get a scrap value. But if I replace after 1 year or 2 years, the scrap value can be got or cannot be got, cannot be got. That should be kept in mind. That means if I replace the old machine now, I'll be getting the scrap value of 8,000. This benefit I will not be getting if I replace after 1 year or 2 years. Point number 1. Respond yes or no. Now, next. If I want to keep the old machine for how many years? 2 years. You want to get the old machine for what? 2 years. That means at the end of the first year, I have to spend how much rupees? 9,000 rupees to overhaul it. Yes or no? That is, old machine 2 years itself is possible only after spending what? 9,000 for overhauling it. That is in the row 3, I will be having an overhaul expense how much rupees? 9,000 at the end of the first year for keeping the old machine for 2 years. Is other detail, yes or no? Apart from that, if the new machine is kept for 5 years, no more extra overhaul. We keep it for what? 8 years. At the end of 5th year, I have to spend what? 10,000. We keep it for what? 10 years. At the end of 8th year, I have to spend how much rupees? 20,000. These are all the cash flows associated. There's no more extra cash flow. Discounted to be used is what? 15%. Respond yes or no? I want you to have all the numbers in fingertips before I go for what? The calculations. Now tell me, one by one. I want to keep the old machine only for 0 years. Only how many years? 0 years. I want to sell the old machine today itself. Can I get anything or not? Yes. How much I get? 8,000. They can keep it for 1 year and sell? Nothing. 2 years and sell? Nothing. That means today if I replace, I have benefit of getting 8,000. Yes or no? Next year, information about old machine is, old machine if I want to keep it for how many years? 2 years. I have to spend at the end of first year 9,000. Remember or not? Now. Next. New machine I have to buy at 40,000. Yes, and this new machine I have to spend 10,000 more. If I want to keep it for how many years? 8 years. When should I spend the 10,000? 5th year end. The new machine has spent what? 20,000 more at 8th year. If I keep it for what? 10 years. These are details. No more number in the sum. Yes or no? And the discount rate is going to be how much percent? 15%. So, whichever of the 9 option gives you what? The highest EAC, that should be selected. Question? Lowest EAC, that should be what? Selected. Yes or no? Now. Understood. Can I proceed? Now. Shall I proceed? Don't be like Arvind Kejriwal, always pinpointing fault here. Can I proceed? Now, please. Let us start doing the solution now. Now, 9 EACs, I don't want to compute in 9 slides. Okay, we can put it in 3 slides. We can compute EAC. First for 5, 8, 10 years now. And then 5 years, 10 years, year later, and then 2 years. I just combine the slide. I think you'll be able to follow it. Can I start or not? Now, we follow one slide. Others can be what? Easily understandable. Now, let me start doing it. Now, there's only examples already discussed. Okay. Now, please participate. They'll give you time to copy the first slide. Second and third will be doing it what? Together. Replace a old machine when? Immediately. Now, okay. In that case, how many options are there? 3 options. Keep the new machine for 5 years, 8 years, 10 years. It is 5 years, 8 years, 10 years options. Remember, right or not? No. Okay. Now, all of you participate. Now, in this, tell the events. Year 0, I am going to fire year 5 and the year 8. Year 0, I am going to have what? An initial outlay. Year 5, I am going to have a first overhaul. I am going to have what? A second overhaul. Overhaul 1 and then what? Overhaul 2. Ennappa, right or not? Now, please. Present value factor for year 0 is 1. I think 15% are discount rate. Now, tell me 1 divided by 1.15 is equal to 5 times present value factor 0.4972. Enna correct? Enna number correct? Now, 1 divided by 1.15 is equal to 8 times 0.3269. Okay, now please, cash flows. Today I have to invest how much in the new machine? 40,000. Old machine gives me 8,000. The initial outlay is only 32,000. It is an outlay. Yes or no? No. At the end of first year, first overhaul, 10,000. 8th year, second overhaul, 20,000. All the three cash flows will come if I want to keep the new mission for 8 years. If I want to keep the new mission only for what? 5 years, I have to spend only what? All the three will come. If you want to give the new mission for 10 years. If you want to give the new mission only for 8 years, I have to spend only 32,000 and then 10,000. Only for 5 years, only 32,000. Ennappa, right or not? Now, I ask you once again the question. This is, old machine is going to replace what? Today. I have three options. Keep the new machine for 5 years, 8 years, 10 years. If I want to keep the new machine for 10 years, you want to keep the new machine for how many years here? 10 years. Then what are the cash flows? 32, 10,000, 20,000. If I want to keep the new machine only for what? 8 years. What are the cash flows? 32,000, 10,000. If I want to keep the new machine only for what? 5 years. What is the cash flow? Only 32,000. Yes or no? Okay, now discounted cash flow is 32,000. 10,000 into 0.4970 is 4,972 and next is 6,538. Now sigma na total cumulative discounted cash flow is 32,000, 36,972 and then 43,510. Ennappa, right or not? Now see, this is my discounted cash flow if I keep the new machine for 5 years. This is my discounted cash flow 36,972. We keep it for how many years? 8 years. And this 43,510 is for what? 10 years. Yes or no? Now, the first is a discount outflow. The project life is 5 years. And next is what? 8 years. And that is what? 10 years. Divided by annuity factor for 5 years, annuity factor for 8 years, annuity factor for 10 years. I'll be getting the EAC for the first three options. Ennappa, right or not? Those who not understood, raise your hand. In the class, I am afraid here. Everybody not understood? Huh? One person, can I tell after class? Minimum 5 years, can I proceed? No. Quorum, okay. Public limited company, can I proceed? No. So please respond, everybody, able to understand this or not? No. So, again I say, I am just cut shorting the solution, making it smaller, that's all. Okay, not to confuse you, to make what? Smaller. Rumba simple. If I want to keep the new machine for how many years? 5 years. Today how much do I spend? 32,000. Any more spending? No. So the discounted cash flow is 32. The 32,000 is spent for how many years? 5 years. What is per annum? It is divided by annuity factor gives you 9546. Now, if I want to keep the new machine for how many years? 8 years. In that case, how much do I spend today? 32. After 5 years, 10,000. The total discount spending is what? 36,972. This money I am spending for keeping the machine for how many years? 8 years. Divided by 8 year annuity factor, I will be getting this EAC. If I want to keep the machine for 10 years, what should I spend today? 32. After 5 years, 10,000. After 8 years, 20,000. The discounted cash outflow is going to be 43,510 for a 10-year project divided by the annuity factor for 10 years gives you this EAC. Respond yes or no. Copy the slide quickly before you just complete the remaining 2 slides in no time. Please copy this quickly. Replacement of old machine immediately. Finish copying up. Over. Those who are not copied, raise your hand. Please, copy fast. Finished up. Those who are not copied, raise your hand. Can I proceed on? No. Remaining two slides will be doing together. Can you guess what is the next idea? Replace old machine after 1 year. Then there is three choice. Keep the new machine for 5 years, 8 years, 10 years. In the case, tell me what will be the project life here? It will be what? 6 years, 9 years, and then 11 years. Enough for right or not? Now, let's do it together. Replacement of old machine 1 year later. Replacement of old machine 1 year later. Same headings open for the table. We'll do it together. Replacement of old machine 1 year later. So you should participate with me in doing the calculations. Replacement of old machine 1 year later. Finish copying up. Shall we start up? Now. Suppose we decide to keep the new machine for 10 years. How many years here? 10 years. Tell me the years in which the cash flow is going to happen. Anything is going to happen today, ma'am? No. I have what? First year, one cash flow. Plus 5 gives you what? 6th year, another cash flow. Then the third cash flow happens in 9th year. Ennappa, right or not? Now. In first year, what is the event here? Initial outlay. New machine is going to be purchased. In first year, I am going to purchase a new machine. At the end of 6th year, what I am going to do? I am going to do the first overhaul. It is first overhaul. At the end of 9th year, second overhaul. All these three will happen if I want to keep the new machine for full 10 years. Ennappa, right or not? Now. Tell me, are you all writing along with me here? Now. Present value factor for year 1 is 0.8696. Year 1 PE factor is 0.8696. Year 6 is 0.4323. Year 6 PV factor is 0.4323. Year 9 PV factor is 0.2843. Year 9 is 0.2843. Can I proceed or not? Now. Today any cash flow? No. End of first year, I purchase a new machine for how much rupees? 40,000. Will I get 8,000 salvage on the old machine? No. The outlay is 40,000. At the end of the 6th year, I have to spend how much rupees? 10,000 rupees. So that the machine can be kept for how many years? 9 years. At the end of the 9th year, I should spend what? Another 20,000. So that the machine can be kept for 11 years. Machine can be kept for 11 years. Now, discounted cash flow 40,000 into 0.8696 gives how much here? 34,784. Number is 34,784. 34,784. This we can multiply on our own. 10,000 to 0.4323 gives you what? 4,323. 4,323. 20,000 to 0.2843 will be giving you 5,686. 5,686. Now, cumulative discounted cash flow 34784 plus 4323 gives you how much here? 39,107 plus what is the number? 5086 gives you 44,793. 44,793. Now, please request stop writing. I finish writing up to this now. Stop writing. Answer me for my confirmation before I proceed further. Okay. I should get myself confirmed or not? Now, see. 44,793 rupees is the discounted outflow. Is what? Discounted outflow. If I want to have how many years life? 11 years life. That is, I should spend 40,000 at the end of first year to buy the new machine. Old machine is kept for already 1 year. I spend 40,000 to buy what? New machine at the end of the first year. I should spend what? 10,000 at the end of 6th year and 20,000 at the end of what? 9th year. To keep for how many years here? 11 years. This is a discounted cash flow for how many years? 11 years. Now, 39,107 discounted cash flow how many years here? 9 years. Because this 20,000 is not spent. So at the end of 9th year, the new machine is going to what? Expire. And this is for how many years? 6 years. Yes or no? Now project life is 6 years, 9 years, 11 years. Don't compare with this year. It will be misleading. You know, this year is when the cash flow is occurring. We spend this 20,000 2 more years. The project will work. Yes or no? So it is going to be 6 years, 9 years, and then 11 years. Yes or no? Annuity factor for 6 years is 3.7845. 3.7845. Annuity factor for say how many years? 9 years is 4.7716. Annuity factor for 11 years 5.2337. 5.2337. Understanding writing it or not? No. The EAC is 34,784 divided by 3.7845. That gives you 9191. 9191. 39,107 divided by 4.7716 gives you 8196. Gives you 8196. 44,793 divided by 5.2337 gives you 8559. That gives you 8559. 9 options are there. How many options completed? 6 options. The last 3 is pending. Can we do it quickly together or not? No. Please respond yes or no. No. Tell me the heading. At least tell me heading for next item. Replacement of old machine after 2 years. Replacement of old machine after 2 years. Same columns open quickly. Please. Finish opening the columns up? Now, tell me, when cash flows is going to happen? Tell me when the cash flow is going to happen. First is what? Year 1. Why year 1? Old machine should be overall to work it for 2 years. Yeah, correct? Yes, do you all remember? Yes, old machine can be only for 1 year. If you want to keep it for what? 2 years. At the end of first year, I should spend how much base? 9,000 to overall the old machine. I don't know now. So first is year 1. What is year 1 even? Overhaul of old machine. Next is what? Year 2. When I buy what? New machine. Year 2 when I buy new machine. Then add 5 to it. Next is what? Year 7. When I do the first overhaul of new machine. And then what? Year 12. Year 9, 10. When I do what? The second overhaul. Yes or no? Now 5 plus 3, 8 years now. Now it becomes what? 7 plus 3, 10 years. Do the second overhaul. Respond. Yes or no? Now. You should tell me the event year. First year, what is the event year? Old machine overhaul. Overhaul, old machine. Overhaul of old machine. What is I want to do in second year? New machine purchase. New machine purchase. From there, after another 5 years, at the end of 7th year, what happens here? First overhaul of new machine. First overall of new mission. Then what? Second overall of new mission. Second overall of new mission. Can tell me the present value factor for year 1. 1 divided by 1.15 is equal to 0.8696. 0.8696. Year 2, 0.7561. Year 2, 0.7561. Year 7, 0.3759. Year 7, 0.3759. Year 10, 0.2472. Year 10, 0.2472. Tell the cash flow if you are all awake. Tell me what is the cash flow? 9,000. Second year, 40,000. Seventh year, 10,000. It is going to be 20,000. 9,000 into 0.8696 gives you how much? 7,826. 7,826. 40,000 into 0.7561 gives you 30,244. 30,244. 10,000 into 0.3759. 3,759. 20,000 into 0.2472. 4,944. 4,944. Cumulative discounted cash flow is 7,826 plus 30,244 gives you 38,070 plus 3,759, it is going to give me 41,829 plus 4,944, that gives me 46,773. 46,773. Right or not? No. First leave it, not applicable. Now, if I spend 9,000 in first year and then 40,000 in what? Second year for new mission, then I'll be having a project with how many years life? 7 years. Old mission kept for 2 years and new mission for what? 5 years. Client how many years here? 7 years. Should anybody explain? Can I understood? Can I proceed? Now, next. Answer me. If I spend 9,000 at the end of first year, the old mission works for how many years? 2 years. I spent another 40,000 for new mission. It was how many years? 5 years. I spent another 10,000 at the end of what? 7th year. It goes up to how many years here? 10 years. So I'm going to have a life of 10 years for this cash flow 41,829. Now, old mission overall, new mission purchase, new mission first overhaul, new mission second overhaul, all the money is spent. I can keep it for how many years here? 12 years. It's going to be for how many years? 12 years. Okay. Annuity factor for 7 years, 4.1604. Annuity factor for 7 years, 4.1604. Don't get fooled by this 2 year. I spend at the end of second year to keep it for 7 years. Other meaning, yes or no? Now, annuity factor for 10 years. I spend at the end of second year, 7th year to keep it how many years here? 10 years. What's the annuity factor? 5.0188. 12 years annuity factor, 5.4206. 5.4206. 5.4206. Now tell me the EAC. 9151. 38,070 by 4.1604. 9151. Second case, the EAC is 8334. 8334. Third case, the EAC is 8629. The EAC is 8629. EAC is 8629. Everybody, yes or no? No. Write down. Final summary. Please. Final summary. These are the 9 options I had now. Now, write the matrix. First option, what is the EAC? First slide, what is the EAC? 9546, 8239, 8689. Got from the first table. Okay. 9546, 8239, 8689. 9191, 8196, 8559. 9191, 8196, 8559. 9151, 8334, 8629. 8334, 8629. Now, these are the EACs of all the 9 options. Highest should be selected, lowest or lower. Which is the lowest here? 8196. Now, so what is the decision to be made here? Keep the old mission for 1 year and keep the new mission for 8 years. That all is 9 years life or not? Write down. Next. Conclusion. Conclusion. replace old machine in an year's time, replace old machine in an year's time, replace old machine in an year's time, and use new machine for 8 years, and use new machine for 8 years, use new machine for 8 years. Okay. So with this we complete the 2 replacement cycle problem. Next class, in another 40 minutes, I'll do an abandonment problem, a continuity, and then come back to the short single index model.